Well, is time running out economically for the government? It hoped for the economic magic pudding, declining inflation, falling interest rates and low unemployment. It might end up with something altogether different. Stubborn inflation, higher interest rates and a recession. Ed Boyd caught up with Deutsche Bank's Phil O'Donoghue, who explained that scenario.
Yeah, look, there's a lot of uncertainty, certainly here in Australia. The RBA is seeing heightened inflation pressures relative to their forecasts, but we just don't know where they're going to land for Q2. I think it's going to be critical for the upcoming RBA board meeting, just where Q2 inflation was sitting relative to the RBA's forecast, but an enormous amount of uncertainty, as you say. The labour market is looking pretty strong. Employment growth is pretty strong, but at the same time we're seeing unemployment rate rising. So a lot for the RBA to digest at its upcoming meeting. Yeah,
we saw the June unemployment figures this week. 4.1%, rate went up, but 50,000 jobs were created. So is there a bit of a disconnect there with the stats? Or?
Yeah, no, look, and difficult to say this, to explain this, but really that's kind of almost a good kind of rise in unemployment. And I mean that because it was associated with a rise in the labour force participation rate. We're now seeing, in fact, that participation rate almost at a record high. So what that means is more people in the labour force looking for work. So with 50,000 new jobs, with an increase in hours worked in the month as well, despite that rise in unemployment, you can actually think about that as a bigger rise in aggregate worker incomes in the month. So that's good for aggregate demand, that's good for households, not so much for the RBA trying to get inflation back to target.
And it also looks like a lot of those jobs created over the past 12 months have been full-time as opposed to part-time.
Yeah, that's right. Certainly in the latest month, that was exactly the case. So again, that's a good income story. If the more hours you're working, the more the better it is for your income. So yeah, that full-time part-time mix is also looking stronger. The one little wrinkle was a rise in unemployment in the month.
Yeah, the Reserve Bank's really been the government's really been hoping that Reserve Bank will cut rates, the economy's going to be all good, sort of like a sort of Goldilocks scenario almost. But it seems like it's not really turning out that way.
Yeah, look, I think unfortunately it's going to be quite some time before we can see rate cuts here in Australia. Inflation is at best moving sideways in Australia. I think it's probably accelerating over the first part of 2024. That's troubling. When I look around the rest of the world, when I look at our peer economies, other members of the G10, in every single one of those other big advanced economies, underlying inflation is falling. We cannot say that here in Australia. That's troubling. That's concerning for the RBA. And I think that's what's going to, unfortunately, prompt a hike at the upcoming meeting in August.
Yes, what are the factors here that you think are going to cause the RBA to lift rates next month?
Yeah, so we're watching. There's a very important piece of data coming out the 31st of July. They'll give us the Q2 inflation numbers. We know what matters, and that is the trim mean number, the underlying inflation rate. The RBA is looking for a 0.8 for the quarter, 0.8 percentage points of growth. I think we're going to be closer to 1.1. That's going, if I'm right, if that's kind of where we land, that's going to be 2 quarters where inflation was materially above the RBA's forecasts. The RBA tell us they want inflation back to target by 2026. If they can't get the very first part of that time frame right, unfortunately, I think the risks are that inflation remains above target for longer. That, I think, for the board's deliberations, I think it's going to force them to look for a hike.
And I guess the RBA might argue one rate hike's not going to make much difference. Would they need to potentially do more?
Yeah, no, look, my sense is that one more will probably be enough. Right. We're not far from getting to being right in terms of the policy stance. One more rate hike, arguably, you could argue that essentially is the same as keeping policy on hold. And by that, I mean that we know that there is a lot of fiscal stimulus that hit the economy on the 1st of July. Federal government, stage 3 tax cuts, but also, and flying under the radar a little bit, state government spending. There's a lot of stimulus coming in. A rate hike at this late point of the cycle might just take a little bit of that aggregate demand back out. My sense is that will be enough. One more hike will, I think, be enough to get back to target. unfortunately, I don't think we're going to get there without that additional cut. But for now, I just think it's just one more hike.
Yeah, because you look around the world, the US is probably going to cut rates in September. It looks now like New Zealand could be cutting rates by November. But the Reserve Bank here has been on a bit of a different path. They're on a bit of an experiment with keeping rates lower than their peers. And is it spluttering a bit, the tactics?
Yeah, look, that's right. And it's important that you know that those other central banks are looking to cut. That does not stop the RBA from hiking. We've done it before. We have seen plenty of times in the past 20 years where our policy cycle has differed from our peers. So that certainly can happen again. I don't think the fact that the Fed's cutting, or in New Zealand, I don't think that automatically means that the RBA won't hike. We can see that differentiation. That said, the fact that the inflation is getting weaker in our peer economies does give us some hope that eventually we can start cutting. Doesn't mean we don't need to hike in the near term, but we are getting some good signs on inflation from global peers, and that's a bit of light at the end of the tunnel, I think, for the RBA. Yeah,
and you look at Australia's economy, economic growth in the first quarter, 0.1%. We're now in, obviously, Q2's just finished. Do you think that quarter was any better than Q1? Or
Look, I don't think it's going to be drastically different. I'm still looking for positive growth in the quarter. We've got some key parcels to come up to sort of really sharpen that view. But, that is obviously pretty soft growth. We'll hear a lot about sort of per capita recessions in Australia. I don't think that narrative is going to change in Q2. The trouble for the RBA really isn't on the demand or the activity side of the economy. It is on the inflation side, just the stickiness in a bunch of inflation measures particularly across the services, the non-tradables part of the economy. That's the problem. Activity story is by and large looking okay in terms of not adding too much stimulus. The problem is just trying to get that last mile of inflation back to target.
And then obviously you mentioned July 1, all the new government stimulus has started feeding through. So what does that outlook give to the next quarter of inflation as well?
Yeah, exactly. Look, that's the problem. And I think that's where I'm landing on a hike in August. I think the RBA is going to look back over the first half of this year. They're going to see that their forecasts were too sanguine, that inflation was actually a little bit stronger than they thought. And of course, that just means when you're adding a bit more demand into the second half of the year, clear risk is that the current forecast for the second half of the year also going to be too soft. So that's really, for me, where my forecast lands on a rate hike coming through in August.
And just want to finish on the employment market. We talked about unemployment being at 4.1% in June. Where is it going to finish at the end of this year?
Yeah, look, I think unfortunately what the inflation data is telling us is clearly the unemployment rate needs to be higher. Now, that's very difficult for the government or for the RBA to talk about, but we know this concept of the NERU. We know that there is a rate of unemployment below which you're generating excess demand and rising inflation. It looks pretty clear to me that that number is above 4.1, probably 4.5 at our best guess. We won't know until we get there. What we do know, I think, is it is clearly above 4.1.
Thanks for coming on the show.
Thanks, Ed.